Andrew Jassy, who is the CEO of Amazon, just released the 2023 Amazon letter to shareholders. As an Amazon shareholder, I love going through and reading the shareholder letters to see the initiatives of the business and get an update on the future of the company. Shareholder letters in general are incredibly insightful and useful. So in today's video, I want to go through all of the highlights that I found in Amazon's 2023 shareholder letter and share them with you. I will also share what my plan is with my Amazon shares and what I think about the stock price today. Now, while we are on the topic of Amazon, I want to let you all know that Amazon is currently running an 11% discount on my book, The Fundamentals of Investing. So if you have been considering getting a copy or you're interested in checking out my book, then now is the time to, as you can save some money. But with that being said, let's hop right into the video. So here this says, last year at this time, I shared my enthusiasm and optimism for Amazon's future. Today, I have even more. The reasons are many, but start with the progress we've made in our financial results and customer experiences, and extend to our continued innovation and remarkable opportunities in front of us. So right away, Andrew Jassy is saying that he is very optimistic on the future of the business, and even more so than he was a year ago. Then the letter says that Amazon grew its total revenue by 12% year over year. But down here, this says, Amazon's operating income and free cash flow dramatically improved. Operating income in 2023 improved 201% year over year. Trailing 12-month free cash flow adjusted for equipment finance leases improved from negative $12.8 billion in 2022 to $35.5 billion in 2023, which was an improvement of $48.3 billion. So Amazon's revenue continues to grow, and its profitability and its profit margins are expanding massively, especially over the past year. Continuing on, this says, in our stores business, customers have enthusiastically responded to our relentless focus on selection, price, and convenience. We continue to have the broadest retail selection, with hundreds of millions of products available, tens of millions added last year alone, and several premium brands starting to list on Amazon. So Amazon says that they continue to have the broadest selection for retail customers, and there is no one else on the internet that has as broad of a selection as Amazon, which in my opinion is deepening Amazon's moat. Then the bottom paragraph here says, this was followed by our extended Black Friday and Cyber Monday holiday shopping event, open to all customers, that became our largest revenue event ever. For all of 2023, customers saved nearly $24 billion across millions of deals and coupons, almost 70% more than the prior year. So you can clearly see that people are trying to save money by going to Amazon, and during the Black Friday and Cyber Monday event, it was the largest revenue event for Amazon ever, and customers saved over 70% more money than they did in 2022. So overall, I think that this is a great thing to see. But continuing on, this is very interesting where it says, in 2023, for the first time since 2018, we reduced our cost to serve on a per unit basis globally. In the US alone, cost to serve was down by more than 45 cents per unit year over year. Now, why this is interesting to me is because inflation has been pretty high, especially over the past 5 years. But despite high inflation, Amazon just said that for the first time since 2018, they have managed to lower their cost to serve on a per unit basis. And in the United States, it's actually down by nearly 50 cents per unit, which I do think is pretty impressive. So Amazon's effort to increase their efficiency and lower their costs is clearly working. And this is actually leading to a pretty significant margin expansion. Then Amazon says here, as we look toward 2024 and beyond, we're not done lowering our cost to serve. We challenged every closely held belief in our fulfillment network and reevaluated every part of it, and found several areas where we believe we can lower costs even further while also delivering faster for our customers. So Amazon is saying that they believe that they can continue to increase their efficiencies while delivering packages faster. This overall means that Amazon is most likely going to continue seeing increased margin expansion over the long term. Now, if we go over to Amazon's financials, we can see that the company's operating cash flow has been spiking over the past about 18 months now. And in the trailing 12 months, the company has now produced $85 billion of operating cash flow. This is pretty significant margin expansion. Now, what's interesting is if we also take a look at Amazon's gross margin over time, we can see here that back in 2012, Amazon had a gross margin of 22.7%. And over the past decade, it has been consistently increasing, now all the way up to about 47%. So Amazon has more than doubled its gross margin over the past decade. Now, if we also take a look at the operating cash flow margin, in the trailing 12 months, it is sitting at about 15% now. Its all-time high was here in 2020 at 17%, and we can clearly see that the margin has been expanding massively over the past about 18 months, but it is not yet at an all-time high. So in my opinion, as Amazon continues finding more and more efficiencies and expanding its business, I do believe its profit margins will continue to make new highs and see new all-time highs probably within the next year or so, which should lead to quite a significant amount of operating cash flow and free cash flow for the business as well. But let's head back over to the shareholder letter here. And this says, internationally, we like the trajectory of our established countries and see meaningful progress in our emerging geographies, such as India, Brazil, Australia, Mexico, Middle East, and Africa, as they continue to expand selection and features and move towards profitability. In Q4 2023, Mexico became our latest international stores locale to turn profitable. We have high conviction that these new geographies will continue to grow and be profitable in the long run. This is interesting to me because Amazon is continuing to expand internationally in a very big way, but these international markets are actually harming the bottom line right now, while Amazon is investing in new geographies and international expansion. And over time, these international geographies should start turning profitable just like Mexico did, and when they do, they will eventually add to Amazon's bottom line. But right now, these are negative for the bottom line, and over time again, these should turn into profitable countries and geographies for Amazon. Then Amazon moves on to talk about their advertising business, where they say, alongside our stores business, Amazon advertising progress remains strong, growing 24% year over year from $38 billion in 2022 to $47 billion in 2023. This is super impressive to me because this is a $47 billion a year business growing at 24% annually. And I do believe that Amazon's advertising business is the fastest growing advertising business out of the Magnificent Seven right now. I mean, Google's business is growing by about 12% annually. Meta is growing around 20% as well, actually, which is pretty insane. But Amazon's ad business, I do believe, is the fastest growing advertising business. Now, it is slightly smaller, I do understand that, but it's still a $47 billion run rate business growing at 20%. And Amazon actually does have multiple different business segments that are doing tens of billions of dollars in annual revenue and are growing well above 10% annually. So it's a very diverse and fast-growing business. Then Andrew Jassy starts to talk about AWS. So this says, shifting to AWS, we started 2023 seeing substantial cost optimization, with most companies trying to save money in an uncertain economy. Much of this optimization was catalyzed by AWS helping customers use the cloud more efficiently and leverage more powerful price-performant AWS capabilities like Graviton chips, our generalized CPU chips that provide roughly 40% better price performance than other leading x86 processors. S3 Intelligent Tiering, a storage AI class that uses AI to detect objects accessed less frequently and stored them in less expensive storage layers. And savings plans, which give customers lower prices in exchange for longer commitments. This work diminished short-term revenue, but was best for our customers. Much appreciated and should bode well for customers and AWS longer term. By the end of 2023, we saw cost optimization attenuating, new deals accelerating, customers renewing at larger commitments over longer time periods, and migrations growing again. So basically, at the start of 2023, customers were trying to optimize their costs, and AWS was really going deep with their customers to help them save money. Now, what this ultimately did was lowered AWS's revenue growth in 2023. And AWS, I believe, was actually the cloud business that saw the lowest amount of revenue growth out of Google, Azure, and AWS. However, Amazon has a history of always putting its customers first. So they worked hard with their customers to help them realize these cost optimizations and save some money. What this does over the long term is builds a strong relationship between Amazon and their customers. So yes, this may result in a short-term hit to AWS's revenue growth, but what it will probably do is result in long-term retention of Amazon's AWS clients. And what Amazon is actually saying is now these clients and customers are done with their cost optimization, and now new deals are accelerating, and customers are renewing at larger commitments over longer periods of time. What this means is they're probably spending more on an annual basis, and they're locking in commitments over longer periods, which probably means that AWS's retention is going to be stronger over the coming years. So I do believe that by Amazon focusing on customer efficiency, they were actually helping their customers and their business over the long term. They were sacrificing short-term growth for long-term gains, which is what Amazon does. This could also mean that AWS is setting itself up to have a stronger 2024 and actually see growth accelerate in this year now. Then Amazon talks about Amazon Prime, and very quickly they say, we have increasing conviction that Prime Video can be a large and profitable business on its own. Now, we all know that streaming businesses have been going through a period of, higher competition and lower profit margins. Netflix has come out above, and Netflix has actually outperformed my own expectations and come out as a free cash flow machine. However, a lot of these streaming businesses are finding it challenging to become profitable. Amazon Prime Video is one of these businesses. However, Prime Video is saying that it does have high conviction that this will turn into a profitable business over the longer term and start generating profits for the overall Amazon business, which I do think is a great thing to see. Now, moving on to one of Amazon's more innovative products that I actually didn't know existed until I read this shareholder letter. So check this out. In October, we hit a major milestone in our journey to commercialize Project Kuiper when we launched 2 end-to-end prototype satellites into space and successfully validated all key systems and subsystems, rare in an initial launch like this. Kuiper is our low Earth orbit satellite initiative that aims to provide broadband connectivity to 400 to 500 million households who don't have it today, as well as governments and enterprises seeking better connectivity and performance in more remote areas, and is a very large revenue opportunity for Amazon. We're on track to launch our first production satellites in 2024. We've still got a long way to go, but we're encouraged by our progress. Now, what does this sound like? Because to me, this sounds like Amazon is trying to compete with Elon Musk's Starlink. I didn't really know that this product even existed until I read this shareholder letter. Then I went down the rabbit hole and I started researching this Kuiper project, which I don't even know if I'm saying it properly, by the way, but I think that this is incredible. And I do love to see that Amazon is taking on Starlink and starting to enter this low orbit satellite business, because I do think that this can be an absolute cash flow machine over the coming decades. I don't think that this is really going to be meaningful for Amazon's business anytime soon, but I do agree that this is a very large revenue opportunity because there is still a large amount of the world that does not get high-speed internet or any internet at all. Additionally, these low orbit satellites have proven to have faster connectivity than the typical undersea wires that we use today. So for these large enterprises that may want to increase their overall connectivity or latency speeds, then using these low orbit satellites could be the way to go. For example, if someone on the stock exchange wants to have a faster ping time or a faster time to make and execute a trade just to get that little bit of an edge over a competitor, then they will probably want to use low orbit satellites at some point in the future, which could mean a significant revenue opportunity for Amazon and also for Starlink, by the way, over the long term. Now, Starlink is massively, massively ahead of Amazon in this space, okay? So Amazon has a lot of catching up to do, but it is still nice to see that there is competition in the space and that Starlink is not going to just have a monopoly on low orbit connectivity. So overall, I do like to see that Amazon is doing this. Then Amazon says, overall 2023 was a strong year, and I'm grateful to our collective teams who delivered on behalf of our customers. These results represented a lot of invention, collaboration, discipline, execution, and reimagination across Amazon. Yet I think every one of us at Amazon believes that we have a long way to go in every one of our businesses before we exhaust how we can make customers' lives better and easier. And there is considerable upside in each of the businesses in which we are investing. This is basically just Andrew Jassy saying that all of Amazon's profitable businesses and businesses that they are investing in today still have a massive runway for growth. And Amazon's business is not nearly done yet. They still got a long way to go. And I actually agree. And I think that Amazon is one of the most innovative businesses in the world, if not the most innovative business in the world. And I do think that, again, the company still has a long runway to go. Then Andrew moves on to the question of what is Amazon's next pillar? And here is his answer. Sometimes people ask us, what's your next pillar? You have Marketplace, Prime, and AWS, but what's next? This, of course, is a thought-provoking question. However, a question people never ask and might be even more interesting is, what's the next set of primitives you're building that enables breakthrough customer experiences? If you asked me today, I'd lead with generative AI. Much of the early public attention has focused on Gen AI applications with the remarkable 2022 launch of ChatGPT. But to our primitive way of thinking, there are 3 distinct layers in the Gen AI stack, each of which is gigantic, and each of which we're deeply investing. The bottom layer is for developers and companies wanting to build foundation models, or FMs. The primary primitives are the compute required to train models and generate inferences, or predictions, and the software that makes it easier to build these models. Starting with compute, the key is the chip inside it. To date, virtually all the leading FMs have been trained on NVIDIA chips, and we continue to offer the broadest collection of NVIDIA instances of any provider. That said, supply has been scarce and cost remains an issue as customers scale their models and applications. Customers have asked us to push the envelope on price performance for AI chips, just as we have with the Graviton for generalized CPU chips. As a result, we've built custom AI training chips named Trainium and inference chips named Inferentia. So basically, Andrew is saying that the bottom layer of this Gen AI wave that is going on is actually the chips and the technology that AI runs on. Now, what's also interesting is Andrew says that basically right now, NVIDIA has a monopoly on the FM Gen AI market. Now, honestly, I'm not too well versed in all of this Gen AI stuff and everything that I'm reading right now. It's a little bit over my head and I'm not that technological, but I'm doing my best here. So basically, all of these models are currently using NVIDIA chips. However, Amazon's customers have said that they want to lower the cost of overall Gen AI because it's too expensive right now. And this is because there was a supply shortage of NVIDIA chips and overall chips that could run generative AI. So what Amazon's answer was is they're starting to make their own chips in-house. Now, what's also interesting to me is Amazon is starting to make their own chips, Apple is making their own chips, Google is making their own chips, Microsoft is making their own chips, and Meta is making their own chips as well. So all of these companies over the past couple of years have spent literally tens of billions of dollars on NVIDIA chips, but I think that it was just too expensive and their capex was way too high. So now what these businesses are doing is they're starting to develop in-house their own AI chips that are also specialized for what Amazon needs or what Meta needs. So I'm interested to see how this is going to play out for NVIDIA over the longer term, because there was kind of a supply shortage of chips that were able to process and handle AI and Gen AI, but it sounds like this is not going to be the case over the longer term going forward. Because again, Amazon is starting to develop and invest in their own chips. So if they do replace NVIDIA and can replace with their own chips, then we're going to have to see how that plays out for NVIDIA, NVIDIA's profit margins, and the demand for NVIDIA chips over the longer term. Now moving on, Andrew says, the middle layer is for customers seeking to leverage an existing FM and customize it with their own data, and leverage a leading cloud provider's security and features to build a Gen AI application, all as a managed service. Amazon Bedrock invented this layer and provides customers with the easiest way to build and scale Gen AI applications, with the broadest selection of first and third-party FMs, as well as a leading ease-of-use capabilities that allow Gen AI builders to get higher quality model inputs more quickly. Bedrock is off to a very strong start with tens of thousands of active customers after just a few months. So what Andrew is saying here is that the second layer of this Gen AI wave is actually providing customers with the ability to create their own Gen AI models. And Amazon is basically supplying that infrastructure and making it easier for any business to want to develop their own kind of like Chat GPT or leverage Gen AI for their specific business. And actually, Stock Unlock is kind of doing this as well. We are using some Gen AI features to start building our own AI features in Stock Unlock as well, and start generating our own AI stock analysis reports. So this wave of Gen AI, or this middle layer, is allowing businesses like mine, businesses like Stock Unlock, to actually train our own AI models and get our own AI outputs. So I agree with Amazon, and I do believe that this is the second level or the second layer of Gen AI, is helping third-party companies develop their own Gen AI as well. Now, the top layer of the stack is the application layer. We're building a substantial number of Gen AI applications across every Amazon customer business. These range from Rufus, our new AI-powered shopping assistant, to an even more intelligent and capable Alexa, to advertising capabilities, which is making it simple with natural language prompts to generate, customize, and edit high-quality images, advertising copies, and videos, to customer and seller services productivity apps, to dozens of others. So what Andrew is saying here is that the top layer of this generative AI wave is actually making the applications for consumers and customers to use. For example, I sell my book on Amazon, The Fundamentals of Investing, which by the way is 11% off right now on Amazon for some reason. They just did that for me. But anyways, if I wanted to make a very nice description or a very nice image of my book to help me advertise it on Amazon.com, then Amazon now has that interface for me. And I've actually used this to generate my own advertisements on Amazon. Amazon gives you some prompts like, what are you advertising? Explain it in a few words, etc., etc. And then they help you through generative AI they help you make the actual advertisement. And they use all of this modeling and all of this training to help you actually get more sales based on their generative AI. So this is kind of the third layer right here is the customer or the consumer, which is myself in this example, interacting with Amazon's generative AI to help me get a better result in my own advertising. So that's kind of the top layer. And these are the three layers that Amazon is talking about. Then Andrew says, these AWS services at all three layers of the stack comprise a set of primitives that democratize this next seminal phase of AI and will empower internal and external builders to transform virtually every customer experience that we know. We're optimistic that much of this world-changing AI will be built on top of AWS. So AWS is basically providing everything that customers need to leverage AI and build it for their own solutions, products, and for their own products essentially. And ultimately, what Amazon's goal is to democratize AI and allow anyone or any business, no matter how small it is, to leverage AI capabilities and allow it to improve their own businesses. Again, like I am doing with my book on Amazon, and like I am doing over at Stock Unlock, and how we are training AI models now to help us analyze stocks. So this is Amazon's next pillar, is helping the world leverage AI in a more efficient way. Then Andrew also talks about the long runway that Amazon still has in front of it. So this says, while we have a nearly $500 billion consumer business, about 80% of the worldwide retail market segment still resides in physical stores. Similarly, with a cloud computing business at nearly $100 billion of revenue run rate, more than 85% of the global IT spend is still on premises. So yes, Amazon does have some massive businesses, but the penetration is still very low. I mean, again, 85% of global IT is still spent on premise. Then Andrew says, generative AI may be the largest technology transformation since the cloud, and perhaps since the internet. That is how big that Andrew and Amazon believes AI is going to be for the future. This Gen AI revolution will be built from the start on top of the cloud. The amount of societal and business benefits from the solutions that will be possible will astound us all. So over the coming years and over the coming decades, we may not even know right now how impactful AI is going to be to businesses and for society. We're just at the surface here. And Amazon says that the AI wave is potentially going to be built on top of AWS by, again, democratizing generative AI and opening the door for more people to actually leverage and benefit from AI in their own businesses as well. Those were all of my key highlights and takeaways from Andrew Jassy's 2023 Amazon letter to shareholders. So here I have a quick list and some bullet points of all of my final thoughts just to summarize this video. Amazon is an incredible business that seems to still have a long runway for future growth. This is Amazon saying that, again, 85% of IT spend is still on premise and 80% of consumer shopping is still done in physical stores. Additionally, they do have multiple segments of the business that are growing incredibly quickly, and they are businesses that are doing tens of billions of dollars in annual revenue. So Amazon, I think, still has a long runway for future growth. And I don't think that this business is going to become a slow growing company anytime soon. As I said earlier, I do believe that Amazon is the most innovative business in the world as well. I don't see any other company dominating a bunch of different market verticals like Amazon does. And again, now Amazon is even investing in low orbit satellites, which is now competing with Starlink, which is just crazy. Every time I dive into Amazon, I find new products and initiatives that I didn't even know existed. Again, like I just said, I'm getting ahead of myself, but like Kuiper and how Amazon is starting to compete with Starlink. That is blowing my mind, and it's incredible. Now, going back to the fact that Amazon has multiple businesses growing quite quickly, I think that this will continue to increase Amazon's overall profit margins over time, because Amazon's ads business, I think, is much, much more profitable than the $500 billion a year consumer business or online sales business. So as the advertising business, which again, I believe is very profitable, and as AWS, which is also a very profitable business, as these businesses continue to grow rapidly and take up more of Amazon's overall sales, then Amazon's margins naturally should expand. So I do believe that Amazon's operating cash flows and free cash flows are going to continue growing rapidly and more rapidly than the overall revenue over the long term as these more profitable businesses make up a larger portion of Amazon's overall business. Amazon also has one of the strongest moats I have ever seen. And honestly, Amazon may have the strongest moat I have ever seen. It's between Amazon and CP Rail. I mean, CP Rail's moat is freaking untouchable. But Amazon's moat may also be untouchable at this point. I don't think there's going to be another company in the entire world that can replicate Amazon's its overall international moat. It's just incredible. Or in other words, I don't think that any company at this point could build what Amazon has built and compete with Amazon while trying to build out this massive network that Amazon has managed to do. So I think that they're solidified. I don't think that any other company is going to come and take away Amazon's moat. Now, additionally, I do not think that Amazon's business is expensive today, and I'm a very happy holder for the long term. Now, why I think that Amazon's business is not expensive today is because the best metric to value this business is the price to operating cash flow. Now, if you're a regular viewer of my channel, then you already know this, but Amazon's price to operating cash flow is about 22.7 today, and its long-term historical average is about 27. So it is still selling well below its historical average price to operating cash flow ratios, which overall means that this business is arguably not even that expensive right now relative to how it has traded historically and relative to how the market has valued it historically. So in my opinion, Amazon is not even an overly expensive business today. And this is one of those businesses that I simply never worry about, and I sleep well at night knowing it makes up a large portion of my portfolio. So that is kind of my thoughts on Amazon right now. I'm not necessarily a massive buyer of Amazon shares, but I am a very happy holder. And again, I do not think that this business is overly expensive today. So I'm a very happy Amazon shareholder. I truly do want to own this business for hopefully ever. And I think that it's just going to continue growing and growing and growing over the longer term. But that is going to wrap up the video for today, everyone. And if you did enjoy this video, then please remember to leave a like on it. And if you're new here, then please consider subscribing to my channel to see more content like this. Also, I would love to hear your comments in the comment section below on what you thought about this type of video. Because if you guys watch my channel, then you know that I typically do stock analysis, but I do enjoy making videos like this that are kind of more, it's like fundamental analysis, but more on what the actual business does and analyzing kind of what the business does and staying up to date with business news. So again, let me know if you did enjoy this type of video in the comment section below. And with that being said, thank you all so much for watching. As always, I truly do appreciate it, and I really hope to see you all again in my next video.